What if real assets could be owned in digital fractions? In 3 chapters: tokenization, blockchain, and CEG Stake. Watch how the pieces connect.
Imagine standing in front of a Picasso. Its value, several million. Out of reach, or so everyone assumed. Not long ago, a Swiss bank took a painting exactly like this and split it into 4,000 shares. One share, 1,000 francs. Suddenly, that Picasso wasn't reserved for millionaires anymore. It belonged to 4,000 people. That is tokenization. And in the next 10 minutes, you'll understand exactly how it works. Let's start at the beginning. Because tokenization isn't something invented yesterday. It's the next step in a very long story. Around 5,000 years ago, people traded by exchanging goods. A sack of grain for a tool. Then came an idea that changed everything. You don't have to trade the whole thing. You can trade shares of it. That idea created the stock markets. A company splits itself into many small pieces and offers them to a large number of investors. Everyone can own a small part. Nobody has to buy the entire company. And this need to divide things into shares kept growing, until it became a global financial market. Now, tokenization takes that idea one decisive step further. Because here, it's not just companies being divided. Almost anything can be. A property, a work of art, a wind farm. Even a single share of stock can be split again. It's called fractional ownership. And the fraction you receive is called a token. The word sounds technical, but you already know the concept. The founder of Bitbond, one of the pioneers in this field, explains it like this. When you go to a fairground and pay admission, you often get a small plastic chip. You hand it over at the ride. That chip is a token. It isn't the value itself. It stands for a value, for a ride, for a right. A digital token works exactly the same way. Only digital. And with one crucial difference. It is unique, tamper-proof, and transferable anywhere in the world. Technically, a token is an entry in a register. It records which address holds how many tokens. And attached to every token are specific rights. The right to a share of rental income, for example. The right to participate in how a piece of art appreciates, or a voting right. So a token is a digital proof of ownership with rights built in. And now we get to what this is really about. Take an apartment worth 100,000 euros. Until now, the rule was simple. Either you have 100,000 euros, or you're not part of it. Down payment, bank meeting, financing. For most people, a closed door. With tokenization, that apartment is divided into 1,000 tokens. One token, 100 euros. And each of those tokens represents a tiny percentage of the property. And the right to that same share of the rental income. So it's no longer the whole apartment or nothing. You can own 1,000th of it. And that is the real revolution. The art market works the same way. Works by leading artists sell for 6 or 7 figures. That market was accessible to exactly one group, the very wealthy. Today you can participate in those same works starting at 1,000 euros. And stocks? A single share in a major company often costs over $1,000. One of the founders of the trading platform Swarm puts the question perfectly. If an Apple share is represented by a token, why shouldn't you be able to buy 1 cent of it if that's what you want? What used to be open to a few is now open to many. The second major advantage, these shares can be traded at any time. Traditional exchanges have opening hours. Buying property means a notary appointment. And even when everything runs smoothly, transferring ownership in conventional financial markets can take up to 2 days. With tokenized assets, it looks different. Trading runs around the clock, 7 days a week, through apps and trading platforms. The markets never close, and settlement happens immediately. You agree on a price, and the transaction settles directly, minutes instead of days. All of it is managed through a wallet. That's nothing more than a digital wallet on your phone. You see your holdings, your incoming payments, your performance as a chart, and you can sell your shares directly when you choose to. No filing cabinet, no appointment, no waiting. This isn't theory for the day after tomorrow. Look at what's running right now. Real estate. Apartments and houses are being divided into shares and made tradable. Art. Alongside that, Picasso, works by top 100 artists, are issued as fully regulated digital securities, with their own securities identification number. Energy. An operator wants to build a wind farm and needs investors. Through tokens, many people share in the revenue. And because it's so efficient, smaller projects suddenly become financeable too. Rooftop solar, neighborhood installations, entire communities participating in the energy generated on their doorstep. Supply chains, agriculture, healthcare, new applications are emerging everywhere, and the market is still at the very beginning. Tokenized assets are currently estimated at under $20 billion. The total market for digital assets sits at around $350 billion. Experts expect this. Once tokenization becomes a standard process for financial transactions, this market could grow larger than the entire volume of financial assets traded today. Let's bring it together. 1. Tokenization divides assets into small, affordable shares, tokens. 2. That removes the single biggest barrier, the cost of entry. 3. Those shares trade around the clock, and settlement takes minutes instead of days. Decentralized, democratic, verifiable, always on. Those are the 4 promises of tokenization. Now, one question remains, and it's the most important one. Why can you trust it? Who guarantees that your share is really yours? Who keeps this register? The answer is the blockchain. And I'll explain it in part 2 of this series, just as clearly as this one. If this made sense to you, subscribe so you don't miss it. In part 1, you saw how Picasso was split into 4,000 shares. But one question stayed open. How do I actually know that my share belongs to me? There's no certificate, no folder, no notary keeping it locked in a cabinet. And yet your ownership is recorded more securely than in any filing cabinet in the world. In the next 9 minutes, you'll understand exactly why. Forget everything you've heard about Bitcoin for a moment. At its core, a blockchain is something surprisingly plain: a register, a list, a record of who owns what. We've had registers for centuries. A land registry is a register. It records who owns a property. A commercial register records who owns a company. Your bank statement is a register too. All of them share one thing: a single institution keeps them. An office, a bank, and you have to trust that this one authority does its job correctly. This is exactly where a blockchain does something different. It's a register that doesn't sit in one place. It exists simultaneously on thousands of computers around the world. Every one of those computers holds the same list. When something changes, they all compare. And only when the network agrees does the entry become valid. That's the whole trick. No single party guards the truth. They all do together. The name explains how it works. New entries aren't stored one by one. They're bundled into blocks. When a block is full, it's sealed and attached to the previous one. Block after block, a chain forms. A blockchain. And here's the crucial part. Every block carries a digital fingerprint of the block before it. Which means, if someone wanted to alter an old entry, its fingerprint would no longer match. The next block wouldn't match. And neither would the one after that. The entire chain would visibly break on thousands of machines at once. That's why people say a blockchain is immutable. Not because changing something is forbidden, but because it would be immediately obvious. What goes in stays traceable. Permanently. So how do you prove a share is yours? Through a pair of keys. You hold two, a public one and a private one. The public key is like your account number. Anyone may see it. It's the address where your tokens live. The private key is your signature. Only you hold it. Only with it can you move what you own. And that creates something that didn't exist in this form before. Anyone on the network can verify that the rightful owner is making a transfer without ever seeing the private key itself. That's real ownership. Your holdings don't depend on whether an institution recorded them correctly. They're proven mathematically. All of it is kept in a wallet, a digital wallet. With professional providers, a regulated custodian handles that for you, much like a bank safeguards your securities account. Now comes the part that turns a blockchain from a mere register into an economic system. Smart contracts. The name sounds complicated. The idea is simple. A smart contract is a program that lives on the blockchain and automatically carries out what was agreed. An example: rent arrives for a tokenized property. The smart contract checks who holds how many shares and distributes the rental income automatically and proportionally to every investor. No property manager making transfers. No waiting. A second example, from the world of bonds. Traditionally, a company appoints a bank as what's called a paying agent. That bank makes sure interest is paid on time and charges for the service. A token can be programmed to know its own interest rate, collect the amount automatically, and distribute it to all investors. The contract becomes the program. And that program does exactly what was agreed. It can't be circumvented, and it can't forget. That's why tokens are described as programmable value. Which brings us to what may matter most for your confidence. None of this happens in a legal vacuum anymore. With MyCA, the European regulation for markets and crypto assets, there is now a single legal framework across the entire EU. Before, every country had its own rules. Some had none at all. Today there's a common standard. The policy lead of the European Blockchain Association puts it like this: if you picture global regulation as a waterfall, Europe stands at the top of it. What was developed here now feeds into the thinking of other jurisdictions. In practical terms, banks and brokers that used to refuse these services outright are increasingly offering them. And in Germany, the Electronic Securities Act now allows fully regulated digital securities, with their own securities identification number, treated like any conventional security. Europe's first approved security token offering was cleared by the German financial regulator back in 2019. The technology has grown up, and the rules are in place. Let's bring it together. A blockchain is a register that belongs to no single institution. It's kept by many together. It's immutable because any manipulation would be instantly visible. Your ownership is secured by your own key, mathematically, not by trusting an authority. And smart contracts handle the payouts automatically. That's why tokenization works. Not because you have to believe in it, but because it can be verified. Which leaves the final question. How do you actually take part? What does it look like to invest in real property starting at $150? That's exactly what I'll show you in part 3. If this was useful, subscribe so you don't miss it. Over the last 2 parts, you've learned what tokenization is and why you can trust it. Now, the question that actually matters: how do you take part? Not in 5 years, not in theory, today. I'll show you using a real platform how people invest in real property starting at $150 and what stands behind it. Welcome to part 3. This is how CEG Stake works. CEG Stake is the investment platform of the CEG Group. Let's start with what matters first in any investment decision. Who are you dealing with? The CEG Group is a Swiss holding company based in Zug, the heart of Europe's blockchain economy, often called Crypto Valley. The group runs 5 operating businesses, and more than 2,000 people are already part of its ecosystem. Every investor goes through a full identity check. The same AML and KYC process you know from your bank. That's not a hurdle. That's a quality mark. It means the platform knows exactly who its investors are. And one thing matters more than anything else here. This is not about betting on price charts. Behind every token stands a real, tangible asset. And CEG invests globally. The United Arab Emirates and Morocco are already in the portfolio. The Maldives and Turkey are being built up right now. And the rest of the world will follow fast. Real buildings, real land, real rental income. CEG Stake offers 4 ways in. Each works differently, and that's the point. You choose the mechanism that fits you. 1. Property tokens. This is the model you know from part 1, applied to real developments. A property is divided into tokens of $150 each. Take the property's value, divide it by 150. That's how many tokens exist. You buy as many as you want, and you own that share of the project. The base return runs at 12 to 15% per year. And here's the part that makes off-plan special. That base is where it starts, not where it ends. When a project performs better, the additional value is distributed to the token holders. The better the property does, the better you do. 2. The CEG Equity Token. Here you don't invest in a single property. You invest in the group itself. Each token represents 0.1% of CEG Group AG. It started at $4,000. Today it stands at $20,000. 3. The Rentals Yield Pool. Rental income from the portfolio flows into one pool and pays out 1% fixed every month. That's the product for people who prefer steady monthly income over long holding periods. 4. The Delta NFT. Entry at $1,250, running a Delta neutral strategy. Built for investors who already know exactly what that means and want it in their mix. 4 products. 4 mechanisms. 1 account. Let me make this concrete with a project that's live right now. Ocean Blue, a seafront resort on Morocco's Atlantic coast. 240 apartments in El Jadida, first row to the beach, 45 minutes from Casablanca and its international airport. Morocco is preparing to co-host the FIFA World Cup in 2030. Infrastructure, flights, and tourism are all scaling up toward it. And here's the investment logic. The project was secured at a price around 16% below the market average for the region. Think back to the base return we just talked about, 12 to 15%. When a project starts 16% under market, you can see why the upside beyond that base is real. Buying below market is the oldest rule in real estate. Tokenization just makes it accessible from $150. So what does this look like day to day? Everything lives in one dashboard. You see your entire portfolio at a glance, which products you hold, how they're performing, what has been paid out. Remember part 2, you're not waiting for a quarterly report. Your portfolio is live synced. You check it the way you check your banking app. And the CEG Stake card is your key to the ecosystem. The principle, one platform, one card, one portfolio, no binders full of contracts, no waiting for an annual statement. Real assets, with the comfort of a modern app. Four steps. Step 1. Create your account at CEGStake.com and complete the identity check. The same process as opening a bank account. Step 2. Choose your product. Property tokens for project upside. The equity token for a stake in the group. The yield pool for fixed monthly income. The Delta NFT if you want a hedge strategy. Step 3. Choose your amount. Property starts at $150. You don't need to start big to start. Step 4. Watch it work. Your portfolio appears in the dashboard, live. And a genuine recommendation. Read through each product's details before you decide. Different mechanisms, different lockups, different profiles. The better you understand what you hold, the better your decisions. That's exactly why this series exists. And with that, the circle closes. In part 1, you saw how tokenization splits assets into affordable shares and opens doors that were closed for decades. In part 2, you learned why it can be trusted. A register kept by many, secured by your own key, executed by contracts that can't forget. And today you've seen what it looks like in practice. Real property, real projects like Ocean Blue, real returns, starting at $150. What used to be open to a few is now open to many. If you want to see it for yourself, CEGStake.com. Create your account, look at the projects, and start at your own pace. Thanks for watching all 3 parts. This is just the beginning.
Tokenization, blockchain, real-world ownership. Now you understand how the pieces connect. CEG Stake own the future of real assets.